Good time to see you all. Today we have seeing is the banking law and practice subject, and we have to see the concept of banking. Before that, we have to see myself, Syed Fazil, Assistant Professor, Department of Accounting and Finance. Today I teach you the concepts of banking and interesting topics we have to see this class. Okay, so we have to begin this class from we have to see, first of all we have to see there is what is banking. Okay, we have an idea. What is the banking of that? You don't have an idea, so we have to explain that. The banking is a financial institution that accepting is a money and deposited it there. And then we have the lending to the customers and business enterprises, everyone. This is a financial institution, we have done it. And then the bank provides many loans to this customer and the people. And then what we have done at, they have to the people have a saving the money. That saving to the banking, the bank creates a interest and rate to the public. So this is a clear picture of banking. What is the banking is done it. And Banking Regulation Act is there. Okay, Banking Regulation Act 1941 is there. They have the and from that they have the Regulation Act from India. They have the Central Bank of India. That's the RBI. They have ruling the other banks are there. So now one by one we have to see the concept is. First we have seen the history of bank. The history of banking, initially we have started in 1770. That's the oldest Hindustan bank we have started. And then we have coming for as a Presidency Bank. That is that bank is started and then running on 1955. And after that we have to getting is a 14 nationalized bank in 1969 and other 6 nationalized bank in 1980 we have to promote it. So now is the clear picture of evaluations of banking. So this clear picture of evaluation we have creating the 5 steps we have given is the first is First Bank of Hindustan, that is 1770. In India they have providing is a banking that is to this customer and to the people. Okay, in initial the period is the first initial starting is Hindustan and Presidential Bank, and the Presidential Bank is that's a majority of the East Indian Company they have started and the colonial finance, and then they have started the Imperial Bank formation, and the Imperial Bank formation that is getting from 1921 on India, and then after the Imperial Bank they have bank is nationalized. The nationalized means they have a transfer Imperial Bank into that is a nationalized government banks they have get it, and then the fifth is we have the public sector banks that getting from like the State Bank we have to getting is these are the steps of evaluations of Indian banking system. This have given. Next, we have seen the Banking Regulation Act. Already I am telling that is a Banking Regulation Act is a 1949. So the Banking Regulation Act we have to pass after that 1949. So the Banking Regulation Act, the banks are creating the rules and regulations, and then they have to follow that. Okay, they have to there's a inflation period and the deflation period. They have to using how to be. They have to the rules or regulations is they have to provide on the same thing. And licensing of bank. In a commencing bank, for commencing bank they have licensing. The section 22 is clearly explained how to be licensing, how to be getting the licensing of bank, what are the needs are providing. So everything is that licensing of bank is covered. Next, we have this is an important topic of your exam point of view as well as everything. That's your different types of bank. So here the different types of bank, what you have to see here one by one. First is central bank. So in India is a primary, that is a central bank is the RBI, Reserve Bank of India. The Reserve Bank of India is a sole proprietary to issue the currency, as well as they have many monetary policies. They have to they have to introduce many monetary policies. They have to control all the bank and bankers bank, as well as they have the sole person to the issuing currency of central bank. And from that we have to subdivision is a commercial banks. From the commercial bank we have to comes under is a public sector bank, private sector bank, foreign bank, cooperative bank and regional rural banks. So here the commercial bank they have to see it as a public sector bank. So what is a public sector bank? The bank is owned by the government. They have to start it as the commencing of bank like providing service to the public, and they have to engaging the people as well as doing the inflation and great economic growth of the country. So next is that like example I just giving the State Bank of India, Punjab National Bank and Bank of Baroda. Like these banks are comes under this public sector banks. And then private sector bank. Private sector banks, the bank is really owned for a profit motive. The business motive and profit motive, they have to open and creating a service to the people at a doorstep nowadays also. And they have to, public sector banks, they're creating a service. There is no queue in the public. We have to compare it to the public sector and the private sector. We have to there is no queue on that. They have what are the queries they have accepted. Okay, and the minute they have done it well. And then we have like some example, HDFC Bank and UTI Bank, ICICI banks are comes in a private sector bank. And foreign bank. The foreign bank, which means the head office, okay, the foreign, they first initially they have commencing a bank in foreign countries, and they providing okay, the head office totally located in foreign, but they have to locate some branch to be here in our country. They are providing to the financial services. So like Citibank and HSBC banks are here. That is a Hong Kong Shanghai Bank. And then we have a cooperative banks. And cooperative banks means they have to really, they have started as a union, the trust. The trust, they have to start as cooperative banks, first commencing and then providing services to complete all of the people. Sometimes they have bank providing is some particular people. Yes, like PMCs, GCB and this cooperative, CCB banks or they comes under the cooperative. And we have seen this for last one is a regional rural banks. Regional rural banks is a totally we have run, the bank is commencing for is a some specified regional for a specified purpose, and then they have a sponsorship bank is also said. Why? Because the bank is getting a sponsorship from a central government, state government, and they have other sponsored banks are there. First they have to some ratio is 50% from central government bank and balance 15% from state government, and rest of the 35% they have getting is the sponsorship banks. They have totally they have run and commencing in that bank is called as a regional rural banks. And then we have to see there is the term financial institutions. There are many financial institutions there. So here we have to see that the state financial corporation. The state financial corporations, under that we have KSFC and Indian financial institutions are there. So financial corporations, they have to develop the economy through industries, and they have developing the housing facilities. They are providing to the some certain community peoples, and they have business firms like they have done is a state finance corporations. And then we have the Indian financial institutions listed on just some listed of the okay institutions. They have see that IFCI. What is IFCI? The Indian Financial Corporation of India, and NABARD, Indian Financial Corporation of India. Okay, there is a Industrial Financial Corporation of India. That what they have done that they are providing the finance and support to the industries. They have promote the next level economy to our country. And then the NABARD is a National Agriculture Bank of Rural and Development. So the Agriculture Bank NABARD is providing us a specified rules and regulations from under the RBI as well as specified financial institution. They have an act also. They have running as helping to the agricultural and rural development. Okay. Next, SIDBI. SIDBI is there is a Industrial Development Bank of India. There is a State Industrial Development Bank of India. SIDBI is also providing as many industries as well as the low range of middle range and also the upper range of industries. They have done it as well as MS. They support many small industries. They have to providing to the funds and loans to the recurring business and doing the economic growth of the individuals. Next we have to see the important concept that is of functions of bank. So here the functions of bank, we have two things. That one is a primary bank, another one is a secondary bank. So that is not a primary function, that secondary function is there. So we have bank is classified as what is the primary function. They have given a space of it. First of all, accepting deposit. So what are accepting deposit? They have banking is a major function is accepting deposit and lending money. That one thing is accepting deposit. We have the kinds, that's saving deposit, fixed deposit, current deposit and recurrent deposit. See one by one what is it? Okay. So first is a saving deposit. What is saving deposit? The person who having is a saving current account, saving account. That person, they have to save money. Okay, saving money or deposit in our account for a saving purpose. Okay, that is a saving deposit and fixed deposit. The person who having a saving account or some account in your bank, okay, the person is the period of time, the fixed period of time, during the 1 year or 2 years or 5 years, the period of times they holding a money with the bank. On the time, the fixed deposit generating the interest to the interest rate to the customers. And then current account. Current deposit means the person who is having a current account. Who is having current account? The person who is doing is a business. That person be having in a current deposit. And then recurring deposit. What is recurring deposit? If you are having a monthly, so monthly payment, like a monthly you have to invest some money. Monthly you have deposited. So totally that coverage of period terms, and the terms and conditions is over and the period of time is over, the money used by the lump sum money you have get it after the period of time is over, that is a recurring deposit, but you have to pay monthly in deposit amount. And then granting loan and advances. We have a cash credit, bank overdraft, loans and discounting bill. So we have a cash credit. The banks are providing cash credit to the individuals and business, and those who are needy, they have account holding on the same bank. Okay, and then bank overdraft. Bank overdraft specified to this current account holder. They have that's example of a bank overdraft means just I'm having I'm a current account holder. I'm having 10,000 rupees my account, but I need it for my business. 15,000 rupees. So I just overdraft money. What I have from overdraft, that is a 15,000 I overdraft. That is concept is a bank overdraft. And they providing loans. Like we have many loans are there, housing loans, personal loans, jewel loans. So we have the many loans they have provided to the banks. And discounting bills to the enterprises and businesses people. They have discounting bills from the banks. And agency function. So bank act like as an agency function. It is the agency functions they provide as a agent to the customer. Okay, the one by one we have seen that fund transfer. We have transfer fund through RTGS, IMPS, and many systems are there nowadays. So they have to transfer the fund from one person to another person. And check collections from they have the like an agent, they have collecting the check and deposited in a bank. They have to transfer money from one person to another. The check collection. Periodic payment collection. Periodic payment or collection. So periodic payment or collection majorly we have to using in our industrials, they have current account holders, they have to using it. And portfolio management and other functions. Portfolio management, the one business that they have to that, like an agent, they have to issue the shares and sell the shares, as well as they have done it like an agent, they have to go and see everything act as a agent to the customers. And they have utility function. What are the utilities they have done it? Issue of draft and a locker facility. What is a locker facility? We have some important documents, some shells. Nowadays we have to get in a locker. We have to pay that rent, locker rent, and then we have to hold some things for safety purpose. In banks are there. Now documents, home documents, everything there. Underwriting of shares. So in our company the shares are not issued, not sold, not subscribed to the public. And that time we have to call up an underwriters. To sell the shares. Bank is providing to the underwriters to our company easy to sell the shares. And then project reports, social welfare programs. So everything in organizing to the utility services. Next, we have to the primary function we have detailed given to be here, the accepting deposit. So amount of money we have to give in the deposit, as well as we have a clear picture and explain these things on before the slides. Okay. So next, the secondary function adhering to the agency to the customer. Okay, so bank act like as an agency. So agency to provide all the services, transfer of fund, collection of check, periodic payments, and portfolio management. Doing act like as the agent. Next, we have more to the second unit, that is the central bank and commercial bank. Central bank, first of all, we have seen that central bank is a institution, financial institution that provide and distributing the money. Okay, there is a only sole proprietor, that is a sole authority of central bank to issue the currency. And this RBI, they have to provide, there is a banks, they have guidelines, giving the guidelines to the bank, all the banks. Okay, in India. As well as in this, the next slide we have to see that is a functions of banks. In this functions of banks we have to see is one by one functions we have to given at. that is a fastest bank of issue. Bank of issue, that is a, this central bank, they issue in the currency at limited is there. So they have to issue in the currency, they have limitations, they have to follow the regulations, and everything is a note issue. That's a monopoly note issues, that is a bank of issue offered as a central bank, and banker, agent and advisor to the government. Central bank ever perform, that's a banker agent. They have to whenever the banks are suffered, whenever the banks have inflation, they have to provide, that is given as a loan, and they have to help it first. And then custodian of cash reserve. All the commercial banks in a country keep providing cash balance and are accounted. And custodian of foreign balances. What is the custodian of foreign balances? That is gold standards. Okay, having the gold standards, the gold rate, and everything, we have the stability of exchange, that is we have to give it. And then lender of last resort. The lender of last resort means they have to have a cash reserve. Cash reserve means if the bank is having a reserve for expecting the unexpected losses, unexpected things they have to expect it. That's why they have to keep it in a reserve. Okay, they have to the lender of last resort, as well as the banks have the financial inclusion, whatever it is. The banks, they have the lender of last resort of central bank. Next we have to see here, that is, this is over. Next we have to see here the commercial bank. What is a commercial bank? Commercial bank is totally, they have opened as a business oriented banks and the profit oriented banks. They have to start up commencing for as a business oriented or as a profit oriented. They have done it as a financial services to the public. So here we have to see that as the utilities of commercial bank. General utility service. They have to services providing to the customer, as well as they have to generate this thing. Next, safe custody service. Safe custody service means they have a gold, silver, like platinum, diamonds. Okay, they have a commercial bank. They have holding slave security, as well as they have to providing as the certificate of gold. Nowadays they have to providing that post office banks also they have to providing this certificate of golds and certificate of bonds. They have to valuable, and there is a safe custody service they are providing like a certain purpose, and they annually pay the rent of it. That is a declared amount. And issue of traveler's check. And issue of traveler's checks means the person is a benefit of traveling customers. They have to issue in traveling checks. They have to see is one thing, and the another person they have issuing the traveler check. And credit information. So at important, the banking is providing the credit information, and then they have like a CIBIL score. They have banks are nowadays they have CIBIL scores there. They have credit information to serving to the online platform, as well as their persons. Everyone should know, you know that what is the CIBIL score of yourself. And then business information. The task of collection is statistical. We have using the statistical data, and they have corrections of it. And then there's banking, trade and commerce. So what you have done it, that comes under as a business information. And underwriting services. Underwriting services I already explained. The shares, the banking is providing underwriting services. They have to sell the unsold things. Okay, and they're getting a commission. Next we have to see is the universal banking. What is a universal banking? A bank that is having like a wholesale and retail and investment banking under one roof. That is universal banking. The universal banking is providing services and investor. First of all, we have to see as a retail banking. What is the retail banking? We have done it. The checking and saving accounts, the checking account balance, and then they have overdraft, loans, credit and debit deposit, and safe deposits, and everything is done. And then we have the wholesale banking. The wholesale banking is borrowers, and then investment massive amount, and investment banking is asset management, securities and traditions. Next we have to see the types of universal banking, the fully integrated universal banking and partly integrated financial calculations. And next we have see the banking practice. What is the banking practice? First we have see the types of banking accounts. One saving account is there, current account. Saving account means normally everyone people is open at the current account. But CASA is there, current account and saving account, the account type is there. And fixed deposit account, recurring deposit account, salary account, NRI, that is a non-resident of India account, joint account with our the minor, they have joint account with our parents, and student account, and then senior citizen account and basic deposit account. These are the types of accounts. Next we have the repo rate and the reverse repo rate. Repo rate means the commercial banks granting loan from the central bank. They have the repo rate. They have, when it is getting a repo rate, they have usually deficiency of fund as well as the high rate of interest as well as the period of inflation. Has the reverse repo rate, they have to be the central bank getting loan from the commercial bank as to ensure the liquidity economy as well as comparatively less. Next we have to see the negotiable instrument. Negotiable instrument. Okay. Next we have the test thing is going on. Okay. Next. Thank you.